So in this chapter, we'll discuss about line of credit. So line of credit, abbreviated as LOC, it's an arrangement between a financial institution, usually a bank and a customer. So what banks will give, they will give like a maximum balance, maximum loan balance. So the borrower can draw funds from that balance. Okay, so as long as the limit is not exceeded, the customer can draw money from the bank. This is like we discussed about fund based facility working capital limits earlier, OCC and SOD, like it's similar to that. So main advantage of line of credit is the flexibility. So borrower can request a certain limit, say 1 crore, but they need not have to draw that entire amount. Okay, so as much as they want, they can draw, say out of 1 crore they'll just draw 10 lakhs, and only on that portion they will pay interest, and not on the entire limit. Okay, so for example, borrowers can repay the entire outstanding balance at once, or they can make minimum monthly payments, so that flexibility will be there. So it's a type of revolving account. Okay, so borrower will spend the money, he'll repay it again, he'll repay it, spend it again, get credits into the account, he'll withdraw again. It's a cycle, it's a revolving cycle. So revolving accounts, just like your credit cards, they are different from installment loans. Okay, so whereas in term loans, like in car loans and housing loans, there borrowers will borrow a set of amount and they repay in equal monthly installments. Here in case of a line of credit, the customer will borrow the funds, credit some funds, again he will use it, again pay. So that's a revolving cycle. So that is the basic difference between line of credit and term loan. So in this chapter, the questions you have to prepare are: what is meant by line of credit? What is the advantage of line of credit? It's a built-in. It's got a built-in flexibility. What's the difference between line of credit and installment loans?